Hey guys, you've joined us on Moneycontrol. I'm Manisha Gupta, and we're talking about the gold prices right now, which have hit all-time highs yet again in the Indian markets, and we've broken above 57,000 rupees per 10 grams as well today. It actually has been a very long run that we've seen come in for the gold prices. In the previous year was 12% of gains for the Indian markets. In this year as well, we've started the month of January itself with nearly 4% of gains for the Indian markets. The rupee is appreciated, so the international markets have had a better run of nearly 6% as well. Well, the run-up continues as you are looking at the dollar index trading on a weaker note below 102. Markets pretty much have factored in that we are looking at a 25 basis point of a rate hike on 1st of Feb, and that is when the US Fed announces its first monetary policy for 2023. The third thing is the inflation concerns, and that has continued to support prices also. The markets also have seen a very strong physical buying. China, which is the largest consumer of gold in the world, has kept up or lived up to its reputation, and we've seen nearly 673 tons of jewelry alone being bought from China in the previous year, in addition to bullion, gold, and the futures contracts, which also are at a multi-year highs, and we have seen that with gold. Do not lose sight of the fact that in the month of September 2022, we saw the gold prices trading at a low of a 30-month lows, by the way, at $1,600 per ounce. From those kind of levels, at $1,930 per ounce, we have been more than $300 there itself. And with the markets believing that the concerns about slowing down, weaker demand, the US dollar index in control are some of the factors which will continue to support the gold prices. As far as the physical buying in the Indian market goes, well, that clearly has come down, off by nearly 50 to 60% because of these volatile and constantly rising prices. But the investment demand continues to be strong. And then, apart from that, the central bank buying has been a big support. In the last quarter, we saw central bank buying being quite strong. Actually, the last 2 quarters, central banks have been the major buyers, with the expectations that banks like China, India, Kazakhstan, Russia, Turkey are some of the banks which will continue to buy, and gold has been a big support as well. Markets from here on will watch out for on what the dollar does, the kind of Chinese demand that you can expect, and of course on what the US Fed gives us in sense of commentary or guidance for for the near future. That will tell you on where the gold prices can go. Because most banks and brokerages will still tell you that it is a must to have gold in your portfolio, because we've seen strong gains coming for this one, and two, there's an expectation that if the current chart continues to sustain, then we perhaps are looking at levels of 1950, 1960 on the higher side for gold, 2000 not too far away from there then. Actually, the all-time high for gold has been at $2,050 an ounce, and we're not too far away from that, $100. For the Indian markets, 57,000 already done. The belief is that we could be closing this year at around 60 to 62,000 per 10 grams on the higher side. So inclusion in portfolio and buying on dips is still a strategy when it comes to gold. Thank you.